Good morning, good afternoon, everybody. LSP here again. As you know, I have not uploaded in a month, and that's not because I have stopped trading or stopped learning. It has been a bit of a weird month, and in this one, we'll dive right into it. Obviously, starting off from the last upload, which was on the 14th of April, is where the first trade was after the last upload, and then I stopped on the 14th of May. So a whole month goes by, and as you can see from the calendar, um, there was on the 14th of April that $1,000 loss. That was a purposeful $1,000 loss, which I'll go into in when I show you the actual trade as well. Just kind of dive into why I did that. And that's why I haven't uploaded, because there was a specific focus for the entire month. So right now we'll dive back into the calendar a little later on and towards the end, just to discuss what we're looking forward to for the next kind of month or two. And we'll dive into one of the trades, starting off with that $1,000 loss. So as you can see, this is the trade from the 14th of April, and I traded ROLR. You can see obviously I put in an order there. I tried to cancel it, but as it cancelled, it actually filled. But this was not the lesson, obviously, why it was $1,000 trade. There was areas, obviously, I'm up $60 here, $50 there. I could have got out. I'm only in half of the position at the moment, so the risk was actually not that much. At least it was 50% of my buying power. There was plenty of opportunity. This actual trade lasted about an hour and 30 minutes. Again, not because I was looking at the trade. I wasn't. Again, I'm still learning. I'm still paper trading. I'm not too bothered about the actual profit and loss at the moment. Obviously, that is the end goal. But there's lots of things that I'm looking at, that I'm implementing new, that I'm obviously looking to see if it works or not. This particular one was focused on the level 2, and I'll fast forward some of the actual trading parts and skip some of it and so on and so forth. But I'll put up what I need to. Um, so the level 2, what I needed to look at, what I've realised once I started looking at it, is the difference between the bid and the ask price. Not only with the bid and the ask, but within the actual bid and the ask prices too. And what I mean by that is obviously the bid price at the moment, obviously it's fluctuating. So you got 106 compared to 112, you got 188 compared to 190, and it just, the spread is just a little bit different. It's not much, which is fine, but then the spread within itself, so you've got 162 to 168 to 189. There's very, very big jumps within the ask and within the bid as well. The reason why I let this run, not only because obviously that is a very obvious observation to make why you're doing that trade in that moment. You can clearly see those numbers, and then the gaps between them, is I wanted to see the correlation between those gaps and the candlesticks that it's making, just over the time period of that trade. So obviously I'm just glancing at the level 2. I'm not just looking at the level 2 when I'm trading. I'm mainly looking at the candlesticks. I'm obviously looking at the indicators as well. At this point, obviously I was $70, $80 down. Again, it's not something that I'm looking at, but I'm looking at the indicators. I'm looking at the chart. I'm looking at the level 2. I'm looking at the time of sales. There's a bunch of things that I'm paying attention to. So I wanted to see what those correlations was. I did find, of course, obviously after you doing this experiment, that with the widespread of the bid and ask, that means that there's a lot more room for slippage. And what we mean by slippage is obviously when you put in an order for buying or selling, you need some areas either side, because your order might not get filled. You know, so in this particular example, I might be buying 1,000 shares. If there's not 1,000 shares on the ask, you buy whatever's on the ask and you allow for slippage. So if you fill out at $11 for 500 shares, and then you might be at 11.01, for 300 shares and 11.02 for 200 shares. So you've got a little bit of slippage. You wanted to buy $11, but you bought $11.01 and $11.02. And this is where it came into kind of play, the first part of it, with the asking price. If you've got the ask price that has got a big spread, then you've got more slippage. You're buying or selling. You're buying less shares, or you're selling for less as well, because of the average price, the dollar cost averaging over that slippage period, dollars. So, if you've got a bigger gap, you've got $11, and then you got $11.05, and you got $11.11. There's just that much bigger gap. That was one thing that is definitely something to be aware of. It does cause more risk. So this particular experiment, of course, with the candles and the level 2 as well, with those bigger gaps, it does mean that the candles, obviously after observing it for an hour and a half, this is what I found, is that the larger the candles can simply only reflect the actual order gaps rather than the momentum or volume that's in the actual stock. So you'll see at past that there's big candles. I'll try and put it on the screen in a minute when I sort out the video, but you'll see that there's big drops or big highs, and that might not necessarily be because there's actual big price movements, but it's just the gap between the bid and the ask price. So there's not actually big things happening, it's just that there's a big spread. So that is something to definitely pay attention to. And yeah, so that was the main hindsight. Obviously the point in the experiment was that to observe the candles, to observe the level 2. So those are the main takeaways for this particular trade. It was literally the candle action does not necessarily represent volatility or momentum, and also the spread in between the ask price, in between people asking, obviously bidding as well, does increase your slippage risk. That's when you're buying, when you're on how much dollar cost averaging over it. So these two do affect obviously whether you lose or whether you are profitable with that particular trade. Those were the lessons learned for this particular trade. Again, I'll dive into some things that will come up to it. This was the main topic of discussion, because after this trade, obviously, it was $3,000 on the account. That dropped me all the way down to $2,000, which did mean I was back to the beginning. But then I decided just to use that $2,000 to carry on doing some experiments for the next month or so. So after the 14th of May, you will find that I will be resetting the account just to set it back at $2,000 after that month of experiment, to go again. And I'll dive in kind of into the next one, where you can see the calendar as well, what I'm actually planning. So as you can see on the calendar here now, then there was a bit of a difference between the April and the beginning of May. Mainly just the number of days that I was trading, just because obviously during this month I had a little look as well. The PDT rule, the pattern day trading rule, that's changing at the beginning of June. Actually doesn't affect cash accounts anyway. It only affects obviously those margin accounts. It does going down to $2,000 anyway, but that doesn't affect me, because obviously the plan is to use a cash account with no leverage. What did change actually was because I looked into the settlement rule. I did think it was the trading day plus 2 days to settle your cash, if it was a cash account, which is why I was only trading every other day. But it turns out obviously in 2024 there was a rule change with that, which was the trading day plus 1, which means you can actually trade with settled cash every single day of the week. So I am going to try that as much as I can anyway. And that's one of the major changes. Obviously, going into the next part of it, I will be trading it as much more as I can, not necessarily limited to 2, but not necessarily trading all 5 days, but just trading all the days that I can trade. Obviously, life gets in the way and so on and so forth. But next thing that I will be focusing on is obviously the stop loss, because as you can see, I was mainly trying to focus on making sure those stop losses were just, I obviously had that in my mindset that I was happy with $100 to $150 loss, and that's what you can see for the most part. But then there's always a lot of big swings. I don't know whether this is because of Webull, and I can't seem to get my reactions are not quick enough to sell or to buy, to be honest. So I don't know whether that's a problem with me or Webull. But also, I am struggling with the actual amount. So with a $2,000, and this is obviously because of all the traders on YouTube and all the other traders that you see, they're making, $1,000 here, $100 there, and that's fine. But what I have found with a $2,000 cash account is, with no leverage, just using the $2,000 buying power, is what I have found is that your profit and loss is probably capped at around $50, without some areas of some great stock and some great momentum. For the most part, I've hit around $50 to $100, and that's what I was doing. You can see in the month of May, especially for the green ones, I was just capping actually my profits as well as my losses, or at least trying to. That's what I was trying to do, and I just found I'm just not quick enough, especially with the losses, because there's a lot of big jumps. So there is a built-in obviously feature in Webull where you can actually set your stop loss and stop profit as well. They've made it a bit more obvious in the last update. So that is what I'm going to be doing. Once I've found a stock, once I've decided that I'm getting in that particular stock, once my order has been filled for the next kind of month or so, I'm just going to set a stop loss and a stop profit, or a take profit, both at around $50, because once you're at a $2,000 account, like I said, that is probably what you're limited to. I'm going to do that for a whole month, and if it carries on going well enough where I am mostly profitable, I'll probably review that after the end of the month. So the month of June, that's what I'll probably be doing. So yeah, that's what I'll be going into next, over the month of June. I'll say June, sorry. The second half of May, and obviously into the second half, the beginning of June as well. So from the 15th of, because the 15th is a Friday as well, so the 15th of May all the way to the 15th of June, I suppose, or at least the end of that week. I suppose I'll just do it week by week. That's what I'll be doing, capping my losses at $50 around, and capping my profits as well. Take profits. And as always, thank you very much for tuning in. I will see you all next week. Have a nice weekend.